Hello, investors. This is Ted Zhang, Associate Portfolio Manager with Revere Asset Management. Today is Friday, December 27th, 4:17 p.m., coming to you from Fort Lauderdale with tonight's Revere Roundup Daily Market Insight video. State of the market, we've labeled it as a weak uptrend. It's because the S&P closed below the 21 EMA marginally, but did hold and close strong after testing the 50-day moving average. Going to the GROTECTION gauge, market leaders we have as neutral now. There's some cracks to the armors of some market leaders. As you can see, the 21 over 21 list definitely got hit today. 19 names down. Short term, S&P is below the 21 EMA, but the Qs closed above. So we still have it at neutral, but we do have that red arrow, red sub arrow, if the S&P were to continue closing below the 21 EMA. Medium term, all major indexes above the 50-day moving average, except small caps, mid caps, and the Dow. So S&P, Nasdaq still healthy, which is why we have that neutral. And long term, everything's still above the 200-day moving average, which is why we have that green arrow. You can see we don't have that coveted four green arrows anymore. So we're definitely more defensive. We're definitely looking to be more passive, less aggressive, and size down with tighter stops. What happened today? Mega caps were heavy, and S&P closes strong following a weak gap down open. 21 over 21 list was down 2.65%. One stock was up, one was pretty much flat, and 19 were down. Big eight down 1.91%. So the big eight, the mega caps definitely hit as well. RG8 down 1.74%. Global 60/40 down 0.57%, and GROTECTION down about 1.4%. So jumping right into the charts, starting off as always with the S&P 500. This is why we have this label as a weak uptrend. We undercut and reclaimed this previous breakout level, as well as the 50 and these lows right here. Rallied 3 days up, closed above the 8 and 21, then had a tight day yesterday, but it was followed by a gap down today, closing below the 21 EMA and 6,000 level. We did hold the 50-day. If you go on a 5-minute chart, we did close strong as well off the intraday lows, which is why we have a weak uptrend and still have not labeled it a correction yet. Equated RSP is a little more worrisome, still below the 8, 21, and 50 with those MAs sloping downward now. 200-day is quite imminent here, and even that is looking the flat. So definitely we want to see these equal weighted indexes to get back into gear, which just shows more stocks are participating than just mega caps. The Qs closed below 21 EMA. This could just be the start. Hold on, give me 1 second. This could just be the start of a potential flag formation, building higher lows and lower highs. But we're monitoring this action here against the 50-day and December 20th lows. Equal weighted, same story here. Weaker, broke this bear flag, below the 8, 21, and 50. Dow also broke this bear wedge below the 8, 21, and 50. Mid caps as well broke this bear wedge below the 8, 21, 50. RS line is declining. Small caps, similar action, broke this bear wedge. As you can see, there's definitely bifurcation between the small mid caps and the Dow, as well as the more mega cap weighted, tech weighted S&P 500 and Nasdaq composites. The VIX, we spiked up today, highs of about 18.5. We backed off right, closing right at the 200-day at about 16. We want to see that continue to back off and get into this coveted 10 to 14 area. The dollar, big move up, broke this flag, continuation, and a new flag. We want to see how this dollar resolves itself, and rates heading higher. The dollar definitely looks like it wants to the upside. Gold, really nothing much to talk about here. Still within this range of 236 to 257, although below the 821 to 50-day moving averages. SLV below 200-day, breaking its own bear wedge. Gold miners has continued to be relatively weaker than gold, making lower lows here. below the 200-day, 821 and 50. Um, we had a failed breakout, pretty, pretty much waterfall down. Had this weak rally to the 50, failed there, and we've trickled down so far. IBIT below the 8 and 21. Looks like this 50 area, this 50-day will come. If we get a quick flush there, that could be a potential add-on opportunity. If we look at the Bitcoin chart, we're just trading within a range now, this 90,000 to 108 range, and more so actually, this 90,000 to 102.5K range. So far, we're continuing to reject this 100,000 level. You can see a lot of resistance right there, but also a lot of support. We're at the 50-day on Bitcoin. 10-week has rose to 89,700, and just want to see how it acts against the 50-day. We're right at in the 10-week. That could be a potential add-on opportunity as a pullback in this primary uptrend. Talking about bonds, the short end of the curve retreated a little bit today, which might point towards the Fed needing to cut more rates later on, but pretty much not too much movement still. 2 year still at 4.3%. 10-year rose 5 basis points once again to 4.63%, and 30-year rose 5 basis points to 4.82%. So that wraps up the inter-asset correlation. Now let's head to the tail of the tape. We've labeled it a weak uptrend. So VIX is at 16.65, and fear and greed is down to 34, -1 from yesterday. We currently still are operating on the bull case, even though we closed below the 21 EMA. But I did take off the bolding. It's definitely weaker here, and we could easily flip to the bear case if we have a sustained break below the 21 EMA, especially 50-day. News today is day 3 of seasonal Santa Claus rally, but in this historically strong period, we're seeing some pretty weak action today, giving back prior gains. We came into the day looking at the S&P versus the 8 and 21, Qs versus the 8 and 21, looking at small caps and looking at rates. We didn't get the pullback in rates. We broke below the 8 and 21 on the S&P, broke below 8 on the Qs. Small caps do not lead. Day count up to the consolidation 1 to down 1. 1 day below the 8 EMA, 1 day below the 21 EMA. Expectations are neutral right now. Some strong sectors, bond yields were up, oil was up, uranium was up. Downside bond prices, dollar. All 11 sectors in the S&P were down. Banks were down. XLC, K, and Y were down as well. Today we trimmed some SSO, bought some RVRK, and just wanted to bring down our exposure a little bit with QID. So we still have a beta of 1.12 and an open heat of 4.43%. Bottom line is mega caps are heavy and S&P closes strong following a weak gap down open. So now, as always, closing off the week, the review of the 21 over 21 list. Actually, since mega caps are weak, let's go over that as well. We'll start off with Apple. Extraordinary action, trending above the 8 EMA after the base breakout over 237. Amazon still pretty good action, but weak today, dragging down the markets, but still finding support above the 21 EMA. Microsoft a bit weaker, breaking below the 8 and 21 and retesting the 50 now. It just looks like it needs more time building the right side of the space. Nothing too ominous yet, unless we really break below the 200. Meta broke out of that base over 600, but came back in, finding support at the 50 and closing right up at the 8 and 21. NVIDIA continues to be weak, and this rounded top formation continues to be on my mind. We're continuing to reject the 140 level. This 50-day is still above price, flattening. We can see a situation where we retest the 200-day as well here. Google, off their willow chip, continues to be strong, still above 190, building a flag here. Great action, more of a high-ish handle. Netflix continues to trend above the 8 and 21, nothing too much to worry about there. And Tesla dropped down below the 8 EMA, took out this igniting bar low, and this is a potential flag forming here too. Higher lows and lower highs. So 21 over 21 list. The only green name that was up today was Teva, following this breakout on data. And this is really great action so far post gap. It's trending nicely above the 8 EMA, and we have 3, 6, 8 days up in a row. RBIK, which we bought today, saw relative strength. And when it started curling up, that's when we decided to take a position. This is some decent post earnings gap action looking to form a U-turn pattern. Deckers still trading above the AN21. Nothing too much to talk about there. Google, we already talked about. Avgo, we own this. Nice U-turn so far. Pretty tight day. Really getting above 250 is the key for Avgo. Reddit tried popping its head up above its all-time highs, but squatted back in so far and find support the EMA. This is still forming a flag here, as you can see. Higher lows and then flat tops. Marvell, this whipsaw action. I don't really have too much to say about this name besides it's just digesting its post-earnings gap. Ollie's bargain after its gap out of this base continues to act well, trending above the AEMA. Twilio, once again, found support, undercut, reclaimed 21, reclaimed the 8. This is still acting really great post-earnings gap. Expedia, building this highish handle, going the weekly. Broke out 160, made a huge move up, retested the 10-week moving average and 50-day. We're putting this nice little 1, 2, 3, 4, 5, 6, 7-week base here. GEV, also giving itself its own 7-week base here. As long as we don't break below December 18th lows and the 50-day, we should be looking good here for potential more upside. A-Lab continues to stay a champ, not even close to the 8 EMA. Made a new high yesterday, pulled back in a little bit today. CLS continues to trend nicely post following its earnings above the AN21. AppLovin just does not want to give up. Even after this enormously 2,000% plus move, acceleration to move, and then another acceleration post earnings, we're still just basing above the AN21. I think over this 350 level, you can take a starter position. Palantir, also really strong, still above the 8 EMA. CRDO continues just to chop around in this range right here post earnings. After you have an extended move and then accelerates again, oftentimes you do need bigger consolidation instead of the shorter flags. SoFi broke a new 52-week highs, reversed, then undercut and reclaimed that. So it failed breakout, then it failed breakout, and now it's getting tight. That's a hallmark of emotions right there when stocks are swinging like that. Rocket Lab, new all-time high yesterday and inside day today. Nothing wrong with that at all. And Bros, still decent action. It was really strong yesterday in the screw bar today back below 8 EMA. But we're still just building this digestion, so nothing too much to worry about. Tesla, we talked about, and BE looks like a wedge drop once again, rejecting this 25 level. We definitely do need to hold these lows here, or else we could probably trickle down back to 20. So that's a review of the 21 over 21 list. And with that said, I'm going to wrap it up for this Friday's and this week's video. As always, we'd love to hear from you. My email is ted@revereasset.com. You can also email Dan and Don at revereasset.com. Our phone is 855-REAL-WEALTH. That is 855-732-5932. Our website is revereasset.com and our YouTube is Revere Asset. If you're interested in becoming a client, please reach out. With that said, I'll wrap it up for today, Friday, December 27th. This is Ted Zhang with Revere Asset Management, telling it like it is. Thanks for listening and have a great rest of your week. And if you do enjoy this video, please like, subscribe, and comment. We do appreciate that as well.